How much term insurance do I need? Many people use thumb rules like X times my living expenses, X times my gross salary. Those are thumb rules. They do not take into consideration your specific situations. You are unique, your specific family situation is unique. But before going into the calculations, there are two things we need to discuss. One is what is human capital and what is financial capital. Human capital is the present value of your earning potential, in the sense what are all the future cash flows which you as an individual can generate, the present value of that, and that is called your human capital. So it depends on multiple factors: your present salary, your skill set, your age, and so on. What is financial capital? Financial capital is the financial assets which you have generated so far. So it is basically your net worth, which is assets minus liabilities. Now that this definition is clear, why do we need term insurance? We do term insurance because we want to protect our human capital, which is our future earning potential. Why do we want to protect it? Because there are people dependent on us, and that is why we want to protect this human capital. Now that is clear, let us jump into the three-step process for calculating the term insurance. The first step in this is understand your net worth. Your net worth is nothing but your total assets minus your total liabilities. Step 2 is identify your family's needs. Let's take an example, folks. This is actually from one of my old customers for whom I did this study. Obviously, the name and some details are slightly changed. Mr. X is 30 years old, married to Mrs. X, and they have a 2-year-old child, Miss Y. His wife is the CEO of his home. How much term insurance does he need? My favorite way of doing this is to draw the family timeline of needs. So step 3 is calculating the final result, which is term insurance required is equal to sum of present value for your needs minus your net worth. Now let us look at the calculation of term insurance required for Mr. X. Step 1 is calculate your total net worth. Step 2 is identify your financial needs as of today. So the total term insurance required will be this minus this, which is your financial needs as of today minus the total net worth, which is equal to the total term insurance required. Most of this is self-explanatory except two things. One is that I've added a flag here to say whether a goal is mandatory or not. It depends on each of us whether we want to plan for certain goals or not plan for it. So we made an assumption at the start that Mrs. X was not working. So Mr. X needs to account for the monthly expenses till Mrs. X end of life, right? So there are multiple assumptions which we make here. Those are made in yellow, right? So years of support required. So if Mrs. X is 30 years, 27 years of age right now, we are assuming that she needs to be supported for the next 50 years. Yearly requirement of Mrs. X right now, we made an assumption that it is 12 lakhs. Obviously, you know your family better. So you need to input your family details here. And see, interestingly enough, we are making a return assumption and an inflation assumption. Why? Because we are talking about monthly expenses till end of life, right? So inflation comes into picture. So you're making an assumption for inflation and you're making a return assumption because you're going to invest the money somewhere and then get interest or dividends, or you're going to systematically withdraw it, right? So you're going to make return assumptions. There is a return assumption, there is an inflation assumption. So the effective return is 1.85%. So don't worry, folks, you input these, the calculator will calculate and tell you what is the value, right? So just to give you an idea, so the effective rate is 1.85% for 50 years. The yearly requirement is 12 lakhs. You calculate the present value, which comes up to 3.8 crores for the supporting the monthly expenses of Miss X till end of life. So add these values up, you get the total mandatory needs to be equal to 4.5 crores, total net worth to be equal to 1.9 crores. So the total term insurance required is 2.6 crores. Hope the calculations are clear. Let me know in the comments if you have any doubts. Why are we using this method instead of just saying X times my salary? Because this is not a guesswork. Your family is unique, you are unique, your needs are unique. So this ensures you take the insurance which your family needs. No more, no less.